Hello friends, welcome back for more Bitcoin technical analysis. Look at that, price is currently 8,680 and the lows, oh there we go, there we are, there we have it. We're currently sitting in the lows right now as we film. So let's dive on into the charts. It's as good a time as any to make a video and see what the prices are getting up to. So thanks for joining me here today, and if you're joining me for the first time, then you're now a Rocky Outcroptician, so welcome to the family. And as you can see, as I pointed out in the intro there, that the prices are currently forming their lows for the day. So let's just start off here on the daily chart and take a look at what's going on, shall we? And I'll just hide that panel as well. We don't need to look at that right now. So of course today is Wednesday, the 4th of March. So thanks for joining me. And this technical analysis that we're looking at here, I suspect will probably be relevant for the next couple of days anyway as well. Just like how the stuff that we've looked at over the last week or so has been relevant right up until today as well that we're looking at. So anyway, we can see here that the prices have come down and there's a white dotted line running through the price action right now. So if we just zoom this right in a bit more, we can take a closer look. Now, if you're just joining us to the channel, then welcome and all that. And that white dotted line is the 200 simple moving average, which I think all the subscribers will know by now, because we can also see this red dotted line here, and that's the 50 simple moving average, and they crossed and created that golden cross. And in yesterday's video, we were looking to see whether or not we would be able to establish ourselves with an open and close above this 200 simple, and we did that, and that's a good thing, despite the fact that the candle was very much a red candle, retracing at some points more than 50% of the previous day's move. So, you know, it wasn't all just a great story all in all, but it was better than nothing, shall we say. And we came back down, and then we wicked right down to even lower than we currently are now, as it happens, and came back up, and we lived above that price yesterday. So we've been supported by the 200 simple. And the question then for today is what's going to happen really in and around this price, this point that we're at right now. Are we going to see the prices continue to go on down and potentially open and close on the smaller time frames below this 200 simple moving average, or will we see them retrace back up the way? Now, if we were to see them retrace back up the way and be above the 200 simple, what we'd be looking at that point would be very much a doji candle, an indecision candle on the charts here. If the body were to remain just this small, shallow body just here, and we'd have something which is similar to these candles, as you can see here, where they're kind of indecision candles. And I suppose they're kind of good enough examples as well of indecision candles, and that you can see with prices look like maybe they'd come back up a bit here above the 200 simple and all that sort of stuff. Will we be supported by them and whatnot? But that indecision candle actually just led to further downside. Then we came down here and you'd be thinking, well, are we going to go down and test this next Fibonacci at the 50% and maybe go on down from there? And well, we had another indecision candle and we came up again. So what would we have there? Well, we'd have another indecision candle. It'd be a curious time as well in and around this 200 simple. So we know as well when we look to the right and we look at this VPVR that we have, this is this set of bars here on the right hand side, and what it shows us is the trading activity that occurred at certain price points. So it's kind of like the volume candles down below here, but it's laid out relative to the price as opposed to time. And you can see here that the drop off in this price area up above us is fairly significant compared to where we are now, and that actually remains the case. Now, of course, it's called VP as in volume profile, VR for visible range, and the visible range part comes into play because it's what's on your screen as I just slowly zoom out here and include more and more information on it. But as I do that, you can see that despite the fact that I'm including more and more in this visible range, that there is indeed a very significant drop-off in trading activity up ahead from where we are now. And what stands between us and there is the 382 Fibonacci retracement of this upward move here from December to Valentine's Day. And so we drew Fibonacci starting here, ending here, going wick to wick. And what we have just above our heads here is this 382 Fibonacci retracement. So that would be our first target to the upside if we were to be able to actually then go on and capitalize on opens and closes above the 200 simple. Can we actually break above that resistance? Now, we've been looking at this for a wee while and saying that this essentially between the 382 and the 50% is our trading range. Of course, both those targets being somewhat greedy, really, fair enough, but that's what we're looking at, and that's what we've been able to capitalize off of over the last week in terms of if you were to be longing it or shorting it, from either of those areas, or indeed if you were to look for breakouts above or below these areas, that's where you could manage your risk around. So some very, very eager people, for instance, on the 1st of March there, could have tried to have shorted it here and then managed their risk very successfully, just $10 up from there. But of course, that would have been a very premature trade. Likewise, on the next day, you could have tried to have gone long from in and above 8,950, knowing that that's a support area. Again, that would have been a premature trade as well. In terms of the oscillators down below, we've got sort of a fade off of the momentum to the downside, seen across all three of them, really, perhaps most significantly on the stochastics and the MACD down below. And if you look at the RSI and just bring it up a bit, you can see that we've actually been sloping down here ever since we tested it around the moving average here, which is towards the upper end of the bearish control zone. So is there anything really of a great deal to be learned from these things when you look at them overall? Not necessarily, not just in terms from what we use them on the Rocky Outcrop channel. Generally, we look for divergence and things like that. And there actually isn't very much here to be writing home about in terms of divergence, really, neither bullish divergence or hidden bearish divergence on this time frame currently where we're operating. And there's other things that come into play in terms of like the relative strength of the asset when you look at the supply and demand in and around this price, and you kind of try to build a picture. And I've been trying to sort of allude to this concept over the last wee while in terms of how you would approach this area in terms of support or resistance, at the 8,950 level, in terms of how you would come up to it and what would it take to really go through it, given that there is an actual historical drop-off in trading activity there. The impetus that goes along with it in order for it to be sort of convincing to the market overall, and then to actually be able to sustain its run up past the next areas of resistance without just purely seeing people taking profit at those areas, or indeed getting out of a position they've been underwater at break even. But you'd need to have the impetus going along with it, in which case you'd have to say that you'd be able to say that you've got a stronger base to be operating off of, and that the people who needed to be shaked out of the market were shaken out at that point, and you could come in and you could maybe see bigger buying volume being associated with perhaps bigger fish, whales and institutions and the like coming in to try and encourage it to go on beyond. Otherwise, you'd be looking at potentially having a weak run up to this area, and it could just be over enthusiastic or sort of naive chartists or whatever that believe that purely because we go above the 8,950 horizontal resistance level, and indeed the 382 on this Fibonacci retracement, that we'd be inevitably working our way back up higher. Because when you see these two other green lines here, which stretch beyond the Fibonacci retracement that we're currently sort of discussing, you can see that they're obviously operating in an area just with a zone here right in the middle of them is the biggest area of trading historically on this VPVR here, just as we're looking just now. And you can see that is in fact the, thank you so much. Wow. I was saying thanks, sir, because I just got a cup of tea. Wow, amazing. Right, I'll try and not lose my point here as I'm making it. Yeah, so you can see that these two numbers here, where that trading activity is in between the 382 of the Fibonacci retracement drawn from the highs in June. In fact, I'll just go over to the weekly so you can see what I'm talking about really quick. And of course, pardon me, this is just for people who are new to the channel again, because everybody that's subscribed for a while knows that I've had these Fibonacci's on here for quite a while. And that what we're looking at here is we've got the all-time highs down to the lows of the previous bear market cycle in 2018, and then similarly from the highs in June 2019 down to December 2019 there. So you've got the full sort of two previous big cycles in the market there, with both of them coming in with their 382s there. As you can see, 382. You might not be able to see that so well, but I can assure you that's what that number says. In that area where we're looking at for resistance, so where there could potentially be resistance coming in there, or at least a reason for people to be buying and selling, and that's one of the things as well to remember, that you're always kind of looking at the difference between demand and supply as well with these things, and that if should you have a great degree of supply, for instance, say a lot of people were to have bought in around this area. You had higher volume candles here. As you can see, all this is higher than over here. So you've got all this supply was bought up by the market and the prices are higher up. And you'd have a lot of traders then who were expecting the prices to go up further, who then maybe would say to themselves, right, okay, so I promise, oh lordy, if you allow the prices to go back up to 10,200, then I swear I will get out of my position, say, for instance, where this 50% retrace line is. And then you can see the prices coming up there, and you'd have a lot of supply there in order to do it. So if you've just got a weak amount of momentum on the upside, then of course it's going to be met with a larger degree of supply, in which case this resistance would come back into play around these areas again. And it's just a matter of looking for confluence, really, and that's why I'm bringing that up there so specifically and pointing that out. So I've more or less covered everything that I want to do for today, but I'm going to just look down here towards the 4-hour time frame just to see if we can see anything standing out here in this general consolidation sideways period that we've got on the go. And other than the fact that, of course, the stochastics come down towards the middle area, but then again, you know, that's more or less an inevitability with these oscillators, because the oscillators, you know, by nature, they oscillate. So, you know, what we're asking here then, I suppose, is whether or not we can see the prices turn around in and around this area and hopefully move these oscillators back towards the upside. Looking here, you can see that we've had a downward trend here towards this bearish control zone, going past the neutral line and the moving average here. And generally speaking, we want to see those things be rejected from the bearish control zone on the first pass, and that to coincide with other factors pushing us towards the upside. Now, if that just gets rejected by the bearish control zone on its first pass, we move on up and we don't actually create another high here, then what we're looking at is, of course, a little sort of double top here in this sideways formation. Now, this is on a small time frame, and it's not actually that doesn't make sense because we're not talking about a previous run up, so it's not really a double top at all. Just kind of pointing that out there, that you'd be looking at that, and if the prices were to just to slink on down here and go on down, then you could have this really sort of short-term cup and handle here that you've got on this small consolidation area. Now, I feel dirty almost even saying this, but this is what we're looking at here. You've got your cup here, as denoted by the sort of the volume increasing towards the downside, flattening off, and then increasing on the way back up again on the way out of it. Then you've got this handle formation happening here, which is operating towards the downside of the downward slope, which is what you want to see on a cup and handle type thing as well. So what this could be is that it going towards the upside. What's the biggest thing working against that? Well, it's coming back off of a downtrend. Now, of course, crucial to the whole cup and handle type scenario is that you'd have an uptrend running up to it beforehand. So that doesn't really work for this whole scenario. But, you know, in terms of just the general way of the market playing out and shaking out people during consolidation phases, that kind of works. You can see though that down here towards this area, there's not very much in terms of trading activity again. So there's very drop off in supply and demand at that area. So you could kind of take some sort of characteristics from the psychology of it and apply it to where we are now, and maybe think that maybe we could be seeing off who needs to get shaken out during this period here, with the potential for some upside. But overall, really, there isn't any great takeaways. There's no sort of like staring you in the face things to be trading off the back of. And I'll probably just wrap it up like that for now. And I can conclude, I guess, by coming back over here and checking where we are currently, and we've gone back up and we've got that doji candle in place now. So that's what we're going to see. Will we end up the day with a doji? Will we end up the day with just below here and close back down below, or could we even get a green candle in here? It's all being sort of in and around that 100 cyan line that we said that isn't the most biggest deal in the videos yesterday and the day before, but you can see that it's having a sort of dynamic around the price. Overall, of course, I prefer to see a small green candle on the day. I'm not particularly worried about the prices overall in terms of sloping more further to the downside currently. If we have a indecision candle just here as it stands, I'm going to have to wait and see how things pan out and look for this consolidation phase coming to some sort of an end. Because generally speaking, it would be fair to have some sort of pennant here, which could just drag on for another couple of days even. We could fill out this area some more, and we'll just keep an eye on how it develops really, and like a sort of keep like a sick child for just now. Okay, thanks very much for tuning in. I hope I've been of some use, some help. Let me know in the comments down below, and I'll see you in the next one. Thanks, and see you next time.